Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with today's European Session Outlook. As always, we'll start with the North American markets. The trade deficit was 15.6% higher compared to August, compared to a revised $41.8 billion deficit in July. A higher trade deficit is a drag on an economy and reduces gross domestic product. It means a country is producing fewer goods and services of its own or buying more from other nations. U.S. exports have fallen 6% compared to 1 year ago, hurt by a rising value of the dollar that's made American goods and services more expensive overseas. The Dow and the Nasdaq were both with sideways movements. The Dixie is down to 95.48 from 96.07, and the biggest mover was the US dollar against the Swiss franc, 80 pips down. Today we have Tier 2 news, the 10-year note auction, and consumer credit change. Alright, onto the EU markets, where we had the Swiss Consumer Price Index come out. It met the expectations with the yearly readings at negative 1.4%. We also had the German factory orders. They disappointed with the monthly readings. The disappointing reading is seen as a sign that slower growth in China and recessions in other key markets are starting to affect Germany's export-driven economy. Also, European Central Bank President Mario Draghi spoke at an art inauguration at the central bank, but he didn't mention the economy or the outlook in his speech. Today we have the non-monetary policy meeting and German 10-year bond auction as news. In the UK, there wasn't much news from the UK yesterday. The FTSE 100 index advanced 0.4% to 6,326.16. With yesterday's gain, the London benchmark has now closed in positive territory for 5 sessions in a row, the longest winning streak since July. Today, we'll be anticipating the GDP estimate released by the National Institute of Economic and Social Research. In Asia and the Pacific, the Bank of Japan didn't change its assessment of the economy, saying it continues to recover moderately, although exports and production are affected by the slowdown in emerging economies. The Nikkei 225 was 192 points down yesterday, but today it's already up with 152 points. The benchmark fell into the red after the Bank of Japan left its annual asset purchases at 80 trillion yen or $665 billion, despite growing signs of trouble in Japan's economy. Such purchases have become policymakers' main tool to beat deflation. We'll be awaiting some important upcoming news from Japan, and namely the machinery orders month on month for August, foreign investment in Japanese stocks, current account, and the trade balance for August as well. In Australia, we had the performance of construction index. It came out 51.9, down from 53.8. Australia's dollar looks to be headed back down against New Zealand after the Aussie Kiwi topped out near its highest level in 2 years. The currency is set to drop against New Zealand's as a more than 60% rebound in dairy prices supports the Kiwi, in contrast to Australia's vulnerability as demand weakens for its key exports of iron ore and coal. Speculators have almost eliminated shorts on the Kiwi as New Zealand is close to completing a cycle of interest rate cuts, while Australia's central bank will be forced to resume easing in the coming months. On to the last sector of the day, commodities. Oil had a big range of $3.30 up, ending $2.40 up. The sharp advance came after OPEC's Secretary General Abdullah Salem El-Badri, speaking at a conference in London yesterday, said oil prices are set to rebound as steep cuts in global oil investment crimp supplies. Gold futures on Tuesday headed for their highest settlement in more than a week, set for a third straight session gain as investors focus on the expectation that benchmark interest rates will be lower for longer. Gold ended $11 higher yesterday. All right, everybody, this was all for today. I will see you next time. Goodbye.